You are listening to chartingwealth.com for Thursday, the 4th of October, 2018. We're just outside New York City getting ready to travel. I will be in Europe for the next week, and we will be doing our dead level best to get these broadcasts out to you, the daily market reviews and the one weekly market review, as timely as possible. We see that the markets are up today, both stocks, that is the S&P 500 and the Nasdaq 100, bonds and gold are down. Our book is available. You'll see a link to a video about it, and you'll see in the show notes links where you can buy it if you want to support the work that we do here and understand fully all that we do. Let's jump into the markets. What do we see going on this week? Well, I am looking at our Heiken Ashi candlesticks. That being said, we'll put that training at the end of the program today so that you'll see the link to it and can take it. Make sure you understand we have about 90,000 people that have taken that training, and it is free. I urge you to listen to that video and take good notes on it. Heiken Ashi candlesticks are measured differently, and what they're showing us is that the market is going up so far for the week. We have a green open box candle. That prior week was some caution, but again, price movement is above the weekly trend line. Now, the derivative oscillator continues to lose energy, and the price percent oscillator is headed down, even though the market's making highs. That tells you something. We'll continue to watch and see if indeed we're going to have a reversal coming. Remember, all market crashes occur in the month of October, so be aware. What do we see going on the two-day chart? Well, it ended with a nice big, well, not huge, but a green open box candle with a long wick on top. However, when we look back to our Heiken Ashi candlestick back on the 21st, that two-day candle ending the last Friday, this one is still below that. Market still sliding sideways. Derivative oscillators negative, losing downward momentum. But that price percent oscillator, our main indicator, those who've read our book and studied, we'll also put at the show notes at the end. We'll give you the training on the price percent oscillator so you understand that a little better. That is very much like the MACD, little different. But what we see there is it's our main indicator, and it's heading down. So again, we're continuing to watch and wait and see if this market's topping out. What do we see on the 4-hour chart? Up in the morning and then down in the afternoon. We see the derivative oscillator lost a little bit of energy. Price percent oscillator looks like it's heading over for a cross down. We'll see how things go on Thursday. That's where we are in the S&P. Just waiting and watching and seeing if this market's topping out. We're getting ready for a down move. Don't know. What do we see on the Heiken Ashi candlesticks as far as the weekly chart goes on the Nasdaq 100 as represented by QQQ? We can see that so far for the week, big up week, the biggest up week in 5 weeks so far. However, derivative oscillator, negative. Price percent oscillator, still negative after that weekly vertical crossover going down all the way back on the week ending the 21st. We've had no opportunity to get in that because the market's been trending upwards, but not enough energy to rotate the price percent oscillator up. That's telling you something. We go to the 2-day chart. This is 6 days of up movement. Price percent oscillators flipped over positive, but derivative oscillators flipped over positive, but the price percent oscillator still negative. So again, keep your eye on things as long as the 2-day and the weekly are in confirmed down moves. If we see a crossover going down on that 4-hour chart, we have an opportunity to jump into it. What do we see on the 4-hour chart? Closer and closer to crossing over, going down. In fact, derivative oscillators already flipped over in the afternoon. Been losing energy for the last 3 days. And price percent oscillator getting close. So watch the market on Thursday. Could be an up market. If it's a down market, it might be an opportunity for you to get into a down trade on QQQ. And again, when we say down trade, down, practice trade. We're not a stock calling service. We're an education firm. We want you to practice with us. And go ahead and print yourself off some copies of the free daily market worksheets, the PDFs that are available to you in the show notes, both at our YouTube channel, at our website, chartingwealth.com, and you name it, it's all there in the show notes at iTunes and SoundCloud, all there. So check those out and go ahead and start using those. We would highly recommend. Okay, go from the Qs now. We go to TLT 20-year bonds. Has this not been a great inverse play so far? we see that bonds have, since we had that weekly vertical crossover going down on the week ending the 14th of September, we're going into our third week of strong down movement. Like we said, down for the day, 1.74% bonds, derivative oscillator gaining downward momentum, price percent oscillator spiking down. Beautiful. What do we see on the 2-day chart? Well, we see that again, a big, strong red down candle with a huge wick on the bottom. Again, just more down movement. Derivative oscillators continuing to lose downward momentum, but that price percent oscillator spiking down. And what do we see on that 4-hour chart? Well, of course, we saw in the morning strong down movement, had a jumping in point after the morning candle closed around noon for jumping back into that play after we had gotten out. Remember, we had originally jumped in to the play after we had that weekly vertical crossover going down, and of course it spiked down. We took that virtual profit and then jumped out when it moved back up, and now we have an opportunity jumping back in again. So keep your eye on the prize. Now we go back to the 4-hour chart, and for those of you who again aren't familiar with how to make money or make virtual money when the market's going down in an ETF, that's called inverse funds or puts or options, and we have a training on inverse funds, how to make money when markets crash. We'll attach that at the end of the channel too, so you'll have 3 good training on the price percent oscillator, on the Heikin Ashi candlesticks, and on inverse funds. So that's what we'll do. Lastly, we go to gold. We look at that weekly chart to begin with, and of course gold has been sliding sideways for many, many weeks now. We see gold attempting to cross over, going up. Hasn't happened yet. We will see if indeed that does occur. Gold down for the day, 0.40%, but we're looking at a weekly, well, we're looking at 3 days of a weekly candle, so 2 more days to see what really happens. We have a green spinning top now, means indecision tending up. Price percent oscillator is heading up, trying to cross over, hasn't done that yet. Of course, we don't call a candle till the end of the week if it's a weekly candle. And we see that the derivative oscillator has gone green, which is a good sign. What do we see on the 2-day chart? 2-day chart is positive. In fact, this latest 2-day candle is a nice big up candle. So that is looking quite nice. And the derivative oscillator gained energy, price percent oscillator moving up. And lastly, we look at the 4-hour chart. What do we see there? We see down movement in the morning and then more in the afternoon. However, derivative oscillators continuing to oscillate upwards, and that price percent oscillator is heading up. So we'll just continue to watch, wait and see what the week has in store for us. If we're going to close this week with a weekly vertical crossover going up on gold, don't know yet. That's where we are as we end the day. We'll continue to review these charts every day for you. And like I said, I am traveling. I will do everything I can to get these things out to you in a timely manner. I am going to do my best, and we will see how good internet connections I have while I'm traveling. God bless, my friends. All the best from the whole team at Charting Wealth.